credit with our own publicly owned banks.
Do you know where credit comes from?
Leverage of
No.
deposits and
No, but where do deposits come from?
Well, it's all bank created. I agree.
But where is it supposed to come from?
Credit. If it were a public system, we're talking about the full faith and credit of the United States. The money of the people
you're missing
credit. It's all our.
All right, let me tell you where it comes
credit.
from, because you're a little confused. It comes from savings, right? The reason that somebody can
I
borrow
disagree
money.
with that.
Well, the reason that somebody can borrow money is because somebody else has saved it.
I know, and that's what's wrong with our system. If you had a system where credit should be, you should be able to monetize future productivity.
So you think that credit, we can short-circuit sacrifice and underconsumption, that we can just create credit out of thin air by running it off a printing press?
That's exactly what banks do. They create
but that's the problem.
Out of thin air. I'm saying that what banks do should be a public function, and then we
No, it shouldn't be done at all. That is the problem. You see, you don't create credit out of thin air. You destroy it. You can't create something with a printing press. Something you actually have to underconsume.
Where do you think money comes from if somebody doesn't create it?
But what gives it value?
There's no gold in our system today.
But what gives it value, Ellen, is the fact that people produce. I mean, there are a lot. Why don't you?
Exactly. That's what I'm saying. So you advance credit, and you pay for labor and materials to produce things, and what they produce gets sold on the market, and the profits are returned back to pay off the loan. That's what credit is. I would say that credit is the best thing that the banking system ever did for us. It was actually a very good invention. The problem with it was that it was private, and that bankers had to keep up this ruse of pretending that they were lending out gold, which they didn't have. So they're always cheating, and they periodically got caught.
The banking system was a great invention because it enabled savers and borrowers to come together in an efficient manner. But you can't have legitimate credit without savings behind it. And when governments come in,
and you do, and that's what we have right now.
No, the governments do that, but it creates problems. We had a stock market bubble in 1920s because the government tried to create credit, and we had a depression when the markets tried to restore balance because the credit created an illusion.
Because the Federal Reserve called in a bunch of loans, and because people lost faith in the dollar, and they rushed to their banks with their dollars, which were backed 40% by gold, and so every time they went with $2 worth of paper dollar bills and traded in for gold, $3 worth of credit had to be called in, and
Federal
it
Reserve
the money supply.
Yeah, Federal Reserve notes were backed, correct, 40% by gold, 100% by commercial paper. But the reason that we had a depression was not because the Fed was too tight. It was because they were too loose during the 1920s. They had to tighten up. The reason we had a depression was because Hoover and then Roosevelt interfered in the economy and refused to let the market to restore balance to the economy that was so screwed up by the Fed being too loose. Because when governments try to create credit out of thin air, it sends false economic signals to the economy that there is more savings than actually exists. So capital investments get made that shouldn't have been made because there was no real savings to finance them. It causes people to make mistakes. And that's what will happen in your world. If all we do is print money, we're not going to have any real economic growth. We're going to have runaway inflation. Take a look at what's happening in Zimbabwe.
What will happen in your world is what is happening in Euroland right now. There's a limited amount of money, and everybody has to borrow from each other at interest, which means there's never enough money to pay off all these loans. And so they're all
loans are going to have to be defaulted on. I mean, that's the reality.
Well, yeah, and that's why you need an expandable money supply.
No, you need that like a hole in the head. All that does is change the nature of the default. Instead of losing money, your money loses value. But anyway, hold on. We'll pick up this discussion after this commercial break, so don't go away.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. And this is Peter Schiff speaking about the Federal Reserve with Ellen Brown. You know, Ellen, there's an old adage that it's the responsibility of the Federal Reserve to take the punch bowl away just as the party gets going. You know, if there was no Fed or if the Fed was owned by Congress, do you think our elected representatives would be able to take the punch bowl away on their own?
I'm not saying that politicians should run the banking system. I'm saying that there was a credit collapse. We don't have enough credit in the system. Private banks aren't doing it. The capital requirement has been raised, so they really can't do it. And the Fed isn't doing it. I mean, they're happy to do it for the banks, and they dabbled a little in doing it for the federal government, though not by much. But the Federal Reserve, Ben Bernanke said last Friday that they were not going to do it for the municipal government. Forget it. That the states the states are on their own. So
well, hopefully they don't monetize state debt, but I have a feeling that they might. But no, the reason that credit isn't there is because the savings aren't there. But earlier you said that you think that Congress should take over and nationalize the Fed. So my question to you is, if Congress did nationalize the Fed, would they be able to act responsibly and take the punch bowl away when the party gets started?
Well, it would still be the Federal Reserve operated by bankers. They're still going to appoint bankers to run it, and the bankers still have the same charges.
Well, but then what would change then? But you just said you wanted to nationalize it. So if we nationalize the Federal Reserve, how would it be different than the Fed that we have right now?
Well, it would not. The 12 Federal Reserve banks, are owned by all the banks in their district. I mean, they're privately owned, and But would monetary policy be any different? What they should do. I mean, if Congress is still in the hands of Wall Street as it is now, of course, it wouldn't be any different. That it does matter who's running Wall Street. Who's running Congress. But it does seem to me that we would have more ability to get our voices heard in Congress if. But the whole idea is we don't want monetary policy being conducted based on a poll. We don't want the central bank to do what's popular. We want it to do what's right. I mean, do you think there are any adverse consequences of having interest rates too low or printing too much money? Well, sure, you can print too much money, but right now we have too little money. I mean, it's all... the Fed's balance sheet is blown out of all proportion. I mean, they how could you say we have too little money? They're creating it like it's going out of style. Because we have much less, banks are not lending like they were before. Well, what are they going to lend? What are they going to lend? They lost a fortune in the housing bubble. Nobody is saving. You can't lend what you don't have. I mean, do you know why we had a housing bubble? So you need to get some credit out there. So we got to start saving, don't we? We need to start. People have to stop spending and put their money in the bank so it can be loaned out. I just think that's a wrong model of what credit is. Well, that's exactly what credit is. It's the price to borrow money. The money has to be saved before it can be loaned out. No, it doesn't. Not if you acknowledge that what we're talking about here is just credit. We're just talking about legal agreements. That's all there is. No, but you have to have, somebody has to save resources before they can be. Of course, see, if what you're saying is true. Your future receivables. No, the receivables themselves. Then why are there poor countries? Why don't? So what you're saying is any country can be rich if it just prints enough money. It's not a question of printing the money. But where do you think it comes from in your version here? Think of it in terms of a community currency. The money is created by the people themselves. If you do work for someone else, then you give them, let's say it's one of these electronic systems, then you just give them But that money, what they create has no value. It comes out of thin air. No, it just diminishes the value of what's already... You're acknowledging that somebody else, you're acknowledging that the community has given you $5 worth of value and that you owe $5 worth of value back. And then that's what money is. It just facilitates trade. It's a lot. It needs to be a lot more than that. It's not just a facilitator of trade. It has to be a store of value. It has to be a unit of account, a unit of deferred payment. And, of course, in America, constitutionally, money is gold and silver. And that's what we need. We need to go back to the Constitution and back to constitutional banking and a constitutional monetary system that handcuffs the federal government and prevents it from doing all the things that you might want it to do, but that it's not supposed to do. But anyway, hey, thank you very much. But it's not going to happen. And so I'm talking about something that could happen, which is state-owned banks. Yeah, well, let's hope that we don't nationalize the Fed, because then it'll be even worse. But anyway, thank you very much, Ellen, for being my guest today. And good luck with your book, Web of Debt, The Shocking Truth About Our Money System. Anyway, that's it. We're running out of time.